All right. What is up, everyone? What is up, YouTube? What's up, traders? What's up, tycoons? Very excited to be back once again, making my return. It's been a busy time for me. Okay, I've got child number 5 currently on the way, due any moment now. Okay, we've had science projects, science fair projects, lots of things going on with the other 4 kids currently at the moment. But enough of that. We're going to get in today's video. What do we see? We see the 10-year treasury yield rolling over. We will discuss that in today's video. We see TLT and bonds breaking out. This is a good sign. This is something we've been looking for. Now, when I say this is something we've been looking for, I haven't been as active on YouTube, but I'm still active all the time in the Discord. Okay. We talked about the RSI being the most oversold. We'll talk about the RSI analysis along with the MACD. If you guys have been following the channel, you guys know that the TLT daily chart MACD has been a very good and reliable buy and sell indicator. We'll cover that in more detail. This was the original post. You can see before the breakout, right? As we're setting up the base in the bearish channel, looking for a move up to the 50 SMA, and look at where we're at now, trading above that 50 SMA. Right. So we'll go into that all in detail and cover the posts in the Discord that we went over, so you guys can see, what it is that I've been looking at, my analysis on TLT and how it's been playing out very, very well. Okay. I know I haven't been as active on YouTube lately, but I am still very active in the trading community. But there's lots of other great info that I want to go over, such as December. Okay. Don't bet against a chase in December. We'll dive into what a chase means and really what that phrase means. All right. And then we'll talk about how, this 3 month period that we're currently in, right? We're in the third month, not necessarily the third month, but the second month. November, December, January is normally very, very bullish for the stock market. We'll go over those details in today's video. We'll also talk about the S&P 500 returns after the October election, all right? And again, really just drive home and emphasize how December is historically a solid month. Typically it's not a good idea to be fading the stock market during December. All right, we'll cover the news, the upcoming news and catalysts, for this week. We'll dive into that further. In my opinion, there's really no more bearish catalyst for the market, right? All of these things could come in terrible and could send the stock market, a few percent lower, 5% lower even. But in terms of, are there any major catalysts to actually cause a bear market currently at the moment? We'll dive into that in today's video. One of the reasons I don't believe that is because we have transports finally breaking out. Okay. This is something I've been paying attention to for a long time. Right. I may not mention it in every video, but I do talk about the Dow index theory and the transports. And if you don't believe me, just take a look at my newsletter. Right. In July, in the summer, I'm talking about the bullish signals in the transportation sector. I'm analyzing, individual stocks in the transportation sector. And we made money on those, right? CHRW. Call options went up well over 200% on CHRW, right? And if you don't know, I'm covering a lot of things in multiple platforms, right? There's the Discord, there's the newsletter, there's the YouTube channel. We'll talk about breadth and the NASDAQ surging, how this is a bullish signal. And then we'll actually take a look at the NASDAQ, right? Via the QQQ. This is something that is right on the verge, okay, of a big move, right? And whether or not that's going to be a big move higher, a big move lower, we'll see. When we take a look at a relative basis, tech has actually been weak. It's been weak pretty much the entire year, but more specifically since the summer highs in the NASDAQ, right, which are actually these summer highs right here, tech has been an underperformer on a relative basis. We'll dive into further what that means, why it's important, and we'll dive into further this chart right here. Okay, this is a very good chart. This has me bullish on the overall market, even with tech underperforming. This is the equal weight consumer discretionary relative performance to equal weight consumer staples. Okay, so it's taking out the whole market cap weighting. I know when people look at consumer discretionary, they say, well, it's all Amazon and Tesla. And you're right, right? Well, if you take that out of the equation and you put it on an equal weight basis, we're hitting new all-time highs in equal weight consumer discretionary relative to equal weight consumer staples. So really great stuff in today's video. We'll also dive in on Bitcoin, give my analysis on Bitcoin and update. I haven't been covering crypto too much on the channel. I dropped a really amazing gem that I hoped you guys watched before the election, well before the election, on what would happen with crypto after the election. And it's playing out very, very nicely. Okay. I know plenty of people who are, just very happy, very thankful that they got into crypto before the election. And it's been a great result. We'll talk about my thoughts on crypto into 2025. But as always, the content on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I started a completely free newsletter. We touched on it earlier. I give out free, valuable finance and trading related content, and I try to sprinkle in free trade ideas in there as well. Many of them have worked out very, very well. That won't always be the case. Of course, there's not a 100% win track record with every single trade idea, but we're high up there. Okay. So it's completely free. Check out the website. You can read some of the past articles and see if it's something you want to sign up for yourself. Now, I don't have a Black Friday code. Okay. I'm basically just extending the promo code Powell. And use that. Okay. Please use that to get in while you can on a discount. Okay. The price of the Discord has been going up as I've been including more and more and more valuable tools and resources, really just making everything easier for what type of trader you are. Not everyone is the same type of trader. So inside of the Discord, you're going to get 20 plus swing trade ideas every single week, custom scripts and indicators, exclusive intel, and exclusive chart layouts. Now, when I mean exclusive, I really do mean exclusive. Okay, these are all things that I custom made myself. These are just some screenshots of some different profits on options trades that I have been in, using some of the different tools and resources in the Discord. Now, these gains are, options trades. They're not typical for the average trader. But once you start to understand things, you can really start to see many of these types of returns. We've got the pulse radar longs. These are for people looking for short-term swing trades. Okay. And when I say short-term, I mean less than 3 months, right? So swing trades anywhere from a couple days lasting to a couple months. All right, we take a look at PCG. We talked about the nice inverse head and shoulders on the scan, and the custom indicators were giving us a buy signal, and you can see that same chart here blew past all of those price targets to the upside within a very short period of time, netting very, very nice call options returns on our runners, right? Because after you get 100% on the call options, you sell half of the play. The rest of the position is risk free, and you can let it run up. We've got the zone finder. These are people looking for short-term trades, okay? Extremely short-term trades, anywhere from a single day. Sometimes these trades hit within a single day. Sometimes they take a week, right? So these are your 5 day or less type of trades. The zone finder is really good for that. I actually debuted the very first trade idea from the zone finder in the investment intelligence newsletter completely for free. And you can see the call options went up on that very, very well also. Now let's dive into today's video, starting off with treasury yields, okay? What do we see here? History often repeats itself. This is a saying that, people have said throughout history, right? I'm not the first person to invent that saying. And sometimes we just forget that history does repeat itself, right? And what do we see? We see, a top forming, right? We have a nice rounded top forming, and we have a negative divergence on the RSI. What does that do? That leads to lower treasury yields, right? Breaking through that 50 SMA, and we see a further collapse. Same thing over here, right? What do we see? We see a negative divergence. We see a topping pattern forming in treasury yields. And what do? We end up breaking through that 50 SMA and seeing treasury yields hit a low and then a lower low. Now, the big question here, okay, when I initially posted this chart, why I had the question marks is because we were wondering if this was going to be a top. We weren't sure yet, but we had the negative divergence, all right, and we've seen that we formed topping patterns multiple times. The question now, okay, now that we've formed a short-term top, the question is, do we put in a low and a higher low right around this 50 SMA and get a bounce and continue higher to put in a higher high? All right. That is your bearish case scenario for TLT and for bonds, right? Do yields end up putting in a higher low and end up making a higher high? All right. Otherwise, we want to see, can this topping pattern, as we've seen twice in the past, break through the 50 SMA and end up creating a lower low, which would be a low here, and then we end up forming some type of lower low, perhaps around the 3.4 area. That's just, a random number I threw out. All right. We may not get that. We may come down to 3.5, right? But ultimately, if you're a bull on the bond market, you're looking for lower lows in treasury yields to see a sustained downtrend in treasury yields, which will result in an uptrend in the bond market and an uptrend sustaining in something like TLT, for instance. So right now, that's the main thing. All right. We've got the same topping pattern with a negative divergence that's resulted in us breaking through that 50 SMA multiple times in the past. Will history repeat itself once again? And if it does, the big question from there is, do we actually put in a low and a lower low, or do we put in a low and a higher low and try to bounce higher and create higher highs in yields? All right. I dropped a very good video talking about how Trump was one of the main reasons why we've been seeing treasury yields continue to spike. They were pricing in a Trump win. Trump did ended up winning. And so now we just really need to see, do we put in higher lows and continue making higher highs and start an uptrend in yields, or was that a little bit of a market overreaction? The market can oftentimes can overreact. That's very, very common. And it's something that you kind of need to anticipate sometimes when things seem to be getting a little too exaggerated. Now, what do I mean by that? Well, when we look at our TLT daily chart, there's a few things here, okay? Really beautiful things, honestly. So we got our MACD crossover to the upside. All right, we'll touch on those in a little bit more detail here soon. But if you look, the trade idea that we had in the Discord was, taking along above here, all right, looking for a move up towards the 50 SMA to get above the 50 SMA. We're just below our profit target here, which was 94.33. We're at 93.97, 30 cents away. If you got into this trade, there's no reason not to take profits or adjust your trailing stop loss or something like that. We had a beautiful, very clean down trending channel right here, very algorithmic selling. All right. When we talk about exaggerated moves, you can see the selling algorithm fully in place here, right? We had the low, we tapped the low here, we tapped the low here. We're continuing to test this trend line. Same thing to the upside, resistance, resistance, and ultimately we end up breaking out of this resistance very, very nicely. So very clean move on TLT after we got that bullish MACD crossover. And we saw TLT very oversold. Okay. If we go back to here, this was October 12th posting in the Discord, posting the in-depth analysis here, talking about how we've seen the highest oversold reading in over a year. And I said specifically, while oversold can often lead to a bounce, people fail to remember the purpose of the RSI, which is determining strength or weakness. In this moment, we're seeing that the RSI is showing that TLT is very weak at the moment. So even though we're at a 200 SMA and we're at the highest oversold readings in over a year, I personally am not wanting to get long here because I know the RSI is telling me, hey, we're weak. This is weakness. Okay. We're showing weakness at the moment. The RSI is not meant to be a buy or sell indicator just because something is oversold, right? And I said that this was going to be a likely scenario, how the last two times that TLT was oversold, we ended up bouncing and then going lower in the coming weeks. We're also dipping below the 200-day moving average. And I mentioned before in a previous video how once we got the first bearish crossover on the MACD daily time frame, this has been a strong sell signal. We marked the sell signal each and every single time. And we talked about the many gaps down to fill, going down to 91 and potentially even 85 to 86. Now, that ended up happening. Okay, we ended up coming down and filling the gap down to 91. And in November, we talked about the flip side. Okay, all of these green boxes here are gaps up to fill. There was a lot of downwards momentum, very exaggerated move. And we talked about filling the gap to the downside. Well, in this process of the sell-off in TLT, we created many, many gaps to the upside. We know that these gaps tend to fill about 90% of the time. The question is when. The question is not if a gap is going to fill. We know there's that 10% chance that a gap never fills, but the question is, when would a gap fill, right? And if we're looking at all of these gap fills to the upside, what are the signals? And again, we were looking for that bullish MACD crossover. We talked about how TLT has been locked in a bearish channel, looking for a potential breakout here soon, targeting the 50 SMA, stop below the recent lows for over a 2-to-1 risk reward ratio. And as we just showed you guys, TLT is now trading above the 50 SMA. Here's that oversold analysis playing out on November 21st. We talked about how, hey, we were oversold, in these prior times in the past. We ended up forming a bullish divergence, and that's when we wanted to perhaps get long. What do we have here? Bullish divergence on the RSI, while the price is heading lower and the RSI is making higher lows. TLT MACD analysis played out November 21st, talking about how we ended up filling the gap down to 91. So again, I may not be active as much as I want on YouTube. I've got a lot of family affairs to deal with, but if you guys really enjoy my analysis and you want to see more of it, I'm active in the Discord all the time. Now, I'm not going to be posting TLT every day, all right? When I post TLT, I'm not posting day trades or, 1 day swing trades, right? I often try to look for a little bit of a larger time frame, try to capture the moves, and present really good opportunities when I see them. Those opportunities aren't going to occur every single day, but when I do see those opportunities, I will be posting them and I will be sharing my thoughts and analysis on it. Now, that's enough of TLT. All right, things are looking good. We want to see if we can hold that 50 SMA. We may see the SMA shuffle right here, right? Which, if you're not familiar with that, basically is when you come across a VWAP or a particular moving average, price often can dance around there, right? It does the shuffle. 1 day it's above, next day it's below, 2 days it's below, 3 days it's above, yada yada yada. But ultimately, you want to see, can we get it above and hold above that 50 SMA, maybe on a weekly basis, right? So if you're looking at the daily chart, you want to see if the close on a Friday can hold above that 50 SMA. Then perhaps that could be a good sign. If we're closing below that 50 SMA, perhaps that could be a bad sign. At the moment, the most recent trade idea has played out. So, if you're in that trade idea, you should be taking profits or adjusting your risk level to make sure that you're stopped out in profits, just in case that play starts to roll over. The TNX, the 10-year treasury yield, also is approaching that 50 SMA, as we mentioned. So now the big question is, do we bounce off of there? The yields continue to head back higher, or do they continue to roll over? Now, if we go into the stock market and talk about a chase in December, don't bet against it. This is from Carson. Carson has really great work. And what do they mean by a chase in December? Well, if you're not familiar, portfolio managers, right? Your financial advisors, they're coming to you at the end of the year. If they're not coming to you at the end of the year, you're coming to them and you're saying, hey, I'm so confident in you. I haven't checked my portfolio. It's December. What do my returns look like? If the stock market is up 20% and your portfolio is under 20%, you're literally telling your, advisor, your financial advisor, what are you doing? Why is my money? I don't even need you. I could have just put all of my money into the SPY, right? Into an S&P 500 index, VOO or something like that. And I don't even have to pay them, I don't have to pay you commissions anymore. I'm going to fire you, right? This is a fear that financial advisors have. So what do? Well, they end up chasing, okay? And so what that means is that they take all of this money that they're managing and they say, hey, I'm underperforming the market. Or maybe, I didn't have enough NVIDIA and maybe our portfolio is only up a 1 or 2% higher than the S&P 500 this year, for instance. How can I, and by the end of the year, chase those gains, right? And that's what happens is a lot of the institutional money, a lot of the money that's being managed for other people, for, wealthy clients, wealthy businesses, trust funds, etc. That money chases the returns, okay? And so if you're looking at a chase in December and that's your question, you don't want to bet against it. All right. This chart right here, this table does a really good job of, showing you guys how that's really not something that you want to look for, with the average gain being up about 2.4% in the month of December. Okay, while that may not be mind blowing, that may not be, something that completely shocks you, but it's just something to, keep yourself in check, right? Is this really, I know valuations, everyone's worried about valuations, everyone's worried about the AI bubble, but at the end of the day, do you want to be the person that's constantly going short the market because you're just betting against the odds because you feel like things aren't right? Michael Burry is very famous for his Big Short, right? There's even a movie, The Big Short. But in that movie, and also what doesn't get publicized as much, is he was underwater for a while. Okay. He was losing money. He was lighting money on fire, shorting the market until that collapse actually happened, and most people don't have the foresight like he did, where he was able to withstand those negative returns, right? And losing money because he knew something was actually going to collapse. Right. So, don't try and bet against the market. You can try to sit out on the sidelines. I'm not here to tell you guys what to do with your money. I'm really just presenting data to you guys and giving you guys my opinions on what, I think about the market. Now, here's some more bullish data, okay? And so I'm sorry for you bears, but November, December, January is a really great time in the market. When it comes to the NASDAQ, the rolling 3-month periods since 1950, this is the best 3-month period, November, December, January. All right. We're up 75.5% of the time through January. Okay. Now, historically, the market tops, okay, in December and January about a little over 50% of the time. Well, why is that? Is because the market tends to go up over time. So it continues to go up throughout the year. And then at the end of the year slash the beginning of the new year is perhaps when you see, tops in the market. So if you are looking for tops, if you are looking for any of those reasons for the market to crash, now is the time to be lookout on those things. And then wait till January is over. Okay. If you start to see some things really collapsing under the belt, where you think we're going to have some type of black swan event, which ultimately it would take some type of black swan event at this, current market pace that we're at to really put us in a bear market. I mentioned before, a lot of the bearish catalysts are behind us. The election's behind us. The Fed is pretty much behind us. We don't necessarily even have to have the most dovish Fed moving forward. We've seen that in the beginning of the year, there was much, much more rate cuts priced into the market, and those rate cuts were quickly priced out of the market. And here we are, the S&P 500 as well, well over 20% gains on the year. Okay. Now, when you look at the NASDAQ election year rolling 3 months period, it also is very, very well. Now, November to January isn't the strongest period. That's actually June to August. But again, this is the second best 3-month consecutive, rolling period right here. So it's very hard to get bet against the market at these moments and at this time where we're at in the beginning of December, recording this video on December 1st. It doesn't make too much sense to be trying to go full portfolio shorting the market or going completely to cash because you could potentially miss out on gains via historical data. The S&P 500 returns after the end of October and election years also look very well. When you look 3 months out, the average gain is up about 3%. 6 months out, you're up about 6%. If you think about that, that's kind of just about 1% a month. So just kind of like that melt up, right? You may hear the term melt up. That kind of just symbolizes and represents a grind higher where you don't see the S&P 500 skyrocketing 3% in a day, consolidating, and then skyrocketing 3% up in the next week, but rather just that slow grind up where, overall the market isn't going down. It's just continually, grinding up a little bit higher. Now, December, very strong month. Okay. I'm just trying to nail this point across. December is historically a solid month. When you look since 1950, over the past 20 years, over the past 10 years, and election years, you can see that December is positive each and every time. So, when it comes to betting against the market, that's just not where I'm at, right? And I've given up on betting against the market, about 2 years ago, right? Markets trend, prices trend, and the trend is higher long term. We're not in a bear market. The bear market has ended. If we do come into a new bear market, then perhaps you can look at playing that trend right to the downside. But for me, I think that there's lots of opportunities in the market. It doesn't just have to be tech. We'll dive into that a little bit later. But when you take a look at our upcoming catalysts, okay, December 2nd, we've got PMIs. December 3rd, we've got JOLTS. December 4th, we got PMI again. We got Powell speaking, okay, on Wednesday, December 4th at 1:45 Eastern. And then Friday, we've got non-farm payrolls, unemployment. To me, this is probably the most bearish, okay? The market is kind of past inflation. With Trump and a lot of the tariff talk, there are a little bit of worries of inflation spiking back up in 2025. That makes a lot of sense. But before Trump, won the electoral, vote for next president, the market was much more concerned with the job report, okay, rather than inflation. And we just wanted to see a strong labor market. We didn't want to see the labor market completely collapse. And so to me, I think that that is where we are looking at. I mean, if you look at non-farm payrolls, the previous was 12K and we're forecasting 194K. Seems like that could come in a little bit low, right? If the previous was 12K. So be on the lookout for that. There could be a potential sell-off on Friday if the NFP report does not come in favorable. All right. What else keeps me bullish in the market? Well, the transports. Okay. I'm a big fan of the Dow Theory. I've got an entire video dedicated to the Dow Theory, my chart layout. You can purchase those chart layouts and the explanations behind those and how I use those. But essentially, just think of it like this. Before technology was the big factor in the market, America was very much an industrial country, okay, manufacturing based country. And so if the goods being processed and manufactured in the country are doing well and those stocks are doing well, well, the companies that are transporting those goods and services should be doing well also. And that's basically sums up your Dow theory. So if you see industrials doing well, which we're XLI industrials look great in the market right now. You want to see the transportation index also doing well. And that's exactly what we see. We've got a nice ascending triangle right here, which is a bullish continuation pattern. Okay, so when you look at this, what is your primary trend heading into this pattern, right? This is our ascending triangle pattern. It's bullish, right? We're in an uptrend. And so being that this is a continuation pattern, you're looking for a continuation of the previous trend. And what do we have? We have a fresh breakout here, right? We've got a fresh breakout above roughly 1700. We're looking at 18,250 to be some resistance area potentially. And above there, we're going to be pretty much setting up for 20,000 on the Dow Jones Transportation Average Index. Okay, this is bullish. If you guys know me, you guys know my chart patterns. This is a nice, beautiful base. Okay, we call this a Kardashian bottom, a big round bottom. We love those. We love to buy those. And oftentimes those lead higher and move to the upside inside of a bull market, which is what we're currently in. And we're using this to gauge whether or not we're in a healthy bull market. And as I mentioned before, this is something that's not new. Okay, this isn't something that I'm just now charting just because it's breaking out. Back in July, all right, the end of the July, talking about the bullish signals in the transportation sector, really wanting to see that confirmation, wanting to see continuation to the upside and ultimately break out of that base that we were talking about. And in July of 24th, speaking about a individual stock, right? C.H. Robinson, which is a really big trucking company, nationwide. And you can see those call options went up very, very well, going up well over 200% back in July, when we got into that play and into that position. Breadth in the NASDAQ has also been surging, and this is oftentimes a bullish signal, right? Each time that you see breadth surging in the NASDAQ, it hasn't led to a crash. It hasn't led to a bear market. Sometimes we consolidate sideways, as you see over here, and over here we consolidate sideways. But ultimately, we end up grinding higher, right? And we continue to grind higher throughout all these moments when breadth in the NASDAQ surges. And I don't see that as a reason, not to continue, or I don't see a reason for that not to continue, rather, is what I should say. Now, when we actually talk about the NASDAQ and the QQQ, I was very focused on the summer highs. Okay, we had the summer highs here right around 503.50. And above those, I mentioned to Discord members right around when we're in this period here. I said, hey, above those summer highs, I'm looking for longs in the NASDAQ and potentially tech companies. And below those, I'm looking for, shorts, right? Back down to the value area or the point of control in this case. We are trading above the value area high at the moment. And we've got a resistance trend line that we've tested once, twice, three times, four times, five times. We know that the more times you test a level, the weaker it gets, right? So we're going to look to see if we can break out to the upside and target 525 on QQQ. But I'm still not necessarily sold. We haven't broken out of that trend line. Yes, we are trading above the value area high currently on the NASDAQ via QQQ, but we could roll over, right? In one bad day, we could break this uptrend line, right? We've got this zone here where, we've bounced on this trend line, four times here early, five times. And then, if we extend this trend line and really just make it a zone, we see we bounce here one, five times right here, six, seven times right here. We just haven't failed we have failed to close below this trend line and below this support box. And this is a buying algorithm right here, really just sustaining the market. Okay. This is algorithmic buying. This is algos stepping in and buying the market each time we come at this algorithm in this trend line. And ultimately, is that algo just going to stop one day, right? Are we going to flush through here? It's a big possibility. Okay, so I'm not entirely sold on the NASDAQ per se or the QQQ. And one of the main reasons is tech has just been such an underperformer. Now, here's where things get interesting. Okay. We talk about the summer highs in the NASDAQ. Okay. If we go back to that previous chart, these are those summer highs. And you see, we had a very strong recovery, made new all-time highs, and we're potentially on the verge of new all-time highs in the QQQ and in the NASDAQ. But when you look at a relative basis, tech has just been a complete underperformer compared to the S&P 500 since then. And so this is a chart that I'm watching a lot. Okay. If this chart can break out and we can get momentum back in semiconductors and we can start seeing relative strength in semiconductors and tech, that could be what propels the S&P 500 higher. Now, what's good about the current state of the market is that we've been continuing to make new all-time highs in the S&P 500, even though tech peaked on a relative basis in the summer. So what this means is breadth, right? And we talked about that market breadth that we saw in the NASDAQ. I don't have a chart right here in front of me to show you guys, but market breadth has been very, very well. It's been very, very healthy. And even though tech has been underperforming since the summer, here we are in December, and we're seeing the S&P 500 hitting new all-time highs. So market breadth has been really good. I haven't traded much tech over the past 3 or 4 months. And admittedly, some of the tech plays that I have aren't doing too well, right? Unless it's very short term. The long-term trend in a lot of these tech plays hasn't been very strong, but that doesn't mean that there aren't setups and opportunities currently at the moment, which I'm posting inside of the Discord. Now, another thing that leaves me bullish on the market and the overall economy is when you take a look at consumer discretionaries versus staples. Okay. The equal weight consumer discretionary relative performance to equal weight consumer staples just hit new all-time highs. That may be a mouthful for you, but let me break it down for you very simply. The stock market has a much better track record than economists, okay? In 2022 and 2023 and throughout 2024, economists have been predicting a recession right around the corner. If you've been listening to them and staying out of the market, well, you've missed out on the, dozens of new all-time highs that the stock market has reached. So rather than relying on economists or news article headlines, you want to see what the market is telling you. Remember, the US economy is highly based and highly dependent on the American consumer. We are a consumer-driven economy. The stock market is showing you, again, this is equal weight. Okay, so we're taking out the market cap weighted factor of Amazon and Tesla, right? Tesla has been absolutely ripping. It's given back some of its gains, but since the Trump trade and since the election, Tesla went on an amazing rally. Okay. And Amazon has been rallying here recently. So for those people who say, oh, well, it's just market cap weighted, it's just all Amazon and Tesla, that's not actually the case. All right. When you actually take a look at things and you look at it on an equal weight basis, consumer discretionary versus consumer staples making a new all-time high. If the stock market and the market participants who, let's just say we agree, is smarter than, some random economist posting an article saying that we're going to a recession, if that's showing new all-time highs, that's data. Okay, that's information that you can use. And it's telling you that the market is currently not pricing in a recession. If the market was pricing in a recession coming in the near term, this would not be making new all-time highs. You would most likely be seeing this rolling over. Okay. And that's the whole basis of this chart. And again, this is just another bullish thing to add to the backdrop, in my opinion. Now, Bitcoin, why do I have a 150K price target on Bitcoin for 2025? Okay. I remember drawing this chart. I remember drawing charts like this for Reddit, for instance. And here we are. We see prices creeping up towards these targets, and it doesn't seem so extravagant or seem so outlandish anymore. Bitcoin was showing very clear signs of a wave four. All right. If you're not familiar with Elliott wave theory, typically, it just suggests that the market moves either in a three-wave or a five-wave structure. Now, your five-wave structure is going to be your impulsive move in the direction of the trend, and a three-wave structure is going to be, essentially in a correction, right? A counter trend. And what I was looking at here was a clear, we had one up, two down. Wave three came right up towards our wave three targets, okay, right near the 1.618 fib extension. And wave four is notoriously known for being very sloppy and messy. And you couldn't describe the price action in Bitcoin for the year of 2024 any more than sloppy and messy. I mean, for almost the entire year, in the beginning of the year, we hit new all-time highs, or not even new all-time highs, I'm not positive, but we hit highs in Bitcoin in the beginning of the year, and then it was just very, very sloppy. And we're looking for this breakout here as confirmation that, hey, maybe wave four lows are in, and we're going to see wave five. Wave five projections put us up to 150K. Now, is this going to happen short term, long term? For me, this is end of 2025 targets. Now, crypto moves very rapidly. Oftentimes we see price overextend past Fibonacci targets. Oftentimes we see price undershoot, right? Just like we did over here, where we ended up seeing, price undershoot the targets here a little bit. So that's where I'm at with Bitcoin. I do think that we have a 150K price target. Whether or not we see a 20, 30, 40% sell-off, something like that in the shorter term, it is very possible, but we really just want to stay above these wave four lows, preferably the wave three highs, okay, right here. So if we can stay above these wave three highs, then that's going to be a very good look for Bitcoin. Okay, we'll just call that about 70K. So if we do pull back, we want to see Bitcoin hold above 70K and ultimately continue higher up towards that 150K price target. Don't forget to sign up for that newsletter, okay? It's completely free. You can join the Investment Intelligence newsletter by using the link in the description down below. You can also join the Discord right now and get a really good deal, okay? The price is going to be going up in 2025. I've got two new tools, resources, scans, indicators that I'm adding for the Discord members that have already been added, but I'm still fine-tuning and figuring out exactly how to present them. Those will be coming out for public access in 2025. So you can get in right now, full access, using promo code Powell at a very nice discount in anticipation of those. Remember, inside, you're going to get 20 plus swing trade ideas every single week, custom scripts and indicators, exclusive intel, exclusive chart layouts, much, much more. These are the type of returns that we're getting on a lot of the plays. Every single play that you guys see inside of the Zone Finder, the Pulse Radar, Equity Scout, different things like that, they are all filtered for options liquidity, meaning that these have liquid options markets where you guys will be able to trade inside of. The Pulse Radar Longs is meant for your short-term swing trade list. So short-term meaning anything less than 3 months, right? Sometimes a couple days, couple weeks, couple months, right? the pulse radar is for you. If you're someone who's not looking to be active all day throughout the day in the market, you're going to love the pulse radar, right? You get the custom indicators, you get the custom scripts, you get the custom chart layout. So all of the hard work is done for you guys. And then on top of that, I also post my own analysis, letting you guys know what it is that I'm seeing and the potential setups. You get the zone finder longs. This is for your much more active trader, right? If you're looking to make trades every single day, looking to monitor trades throughout the day, the zone finder is going to be for you. Sometimes those targets hit within the same day. Sometimes it take a day or two. Essentially, this is going to be your intraday to swing trade under a week list, right? Is going to be the zone finder. As I mentioned, I published the very first trade idea from the zone finder in the investment intelligence newsletter. So you're really going to want to subscribe for that. I may put out some more zone finder, pulse radar. I have the equity scout, compression hunter, much more things that, I may debut out in the newsletter as well. All right. There's a full website associated with it, so you guys can go back, review, check the stuff, right? Call me out on my BS. Look at some of these different trade ideas that I posted out there for you guys. I really tried to provide value, and at the end of the day, that's the whole reason I created this YouTube channel. I saw a lot of BS, a lot of pump and dumpers, and I just couldn't find anybody really putting out good technical analysis. So I wanted to create my own channel to provide what I think is good, valuable information to you guys. Now, one last thing, okay? There's a Ko-Fi page. If you click on my Ko-Fi page, you guys can sign up for that, and you can book coaching sessions, right? If you ever feel like you need a one-on-one session, whether it's day trading, that's really where I started off and made my bread and butter. And then as you make some money from day trading, then you can focus on swing trading. That's how I took it. That doesn't have to be the route for you. If you want to focus on swing trading or want to focus on day trading, and you need some questions or need some clarity, feel free to book a session with me using that Ko-Fi page. You can book a 30-minute or 1 hour session using the link in the description down below.